It's been an imperative change because shareholders are demanding it. We believe at the moment the push from investors to decarbonize is so strong that they're effectively pricing in somewhere between $40 and $80 per ton for carbon emissions in the differentiated cost of capital they are applying between hydrocarbon investments and renewables. So big oils have to change, and I think they are changing. They're truly becoming big energy companies that will invest in renewables, but also in hydrogen and carbon capture.
And yet these big energy companies, if they were a cloud company or a .com company, they would be trading at a massive premium because of their aspirations to turn themselves into high-growth renewable companies. As it is, they trade, as I mentioned beforehand, at a huge discount to the broader market as well. Will anything ever change in the near term in investors' psyche that will appreciate the fact that they are trying to tap in to the 21st century zeitgeist, so to speak, Michele?
I think there will be two major drivers of change, which investors are perhaps not fully appreciating at the moment. The first one is the investment in renewables, hydrogen, carbon capture, which will carry a higher multiple. But the second and equally important one is the tremendous cost-cutting and capital efficiency they are starting to apply to their legacy oil and gas business, which will bring corporate returns and free cash flow generation higher, and we believe could lead to a restart of the buyback programs already in 2021.
Michele, my question really relates to how you get the best return as an investor here. I mean, Steve talked about some of the weakness for energy, but that was largely oil and gas. If you look at TAN, T-A-N, one of the renewable ETFs, it's up something like 60% so far this year. QCLN, that's another one in the renewable energy space, up something like 80% so far this year. So a lot of people are already in on this trade. How much more is there to go for short term?
I believe there is a lot more to go in the energy space. We're just at the beginning of the transformation. And to be fair, until now, the transformation has been very one-dimensional, renewable power. We believe as we go to net zero, that it will become multidimensional. Green hydrogen will become a major market. Carbon capture will become another major technology. And these are areas where we believe big oils are much better placed to add value.
But in terms of which companies will do best here and where it's safe to park your money, I mean, obviously you're looking for free cash flow, you're looking for a strong balance sheet, but will it be some of these multi-platform businesses like Brookfield that are trying to capture the opportunity in many different renewables like solar and storage and wind? Or should we be looking at a First Solar that's primarily just focused in and concentrated on one specific technology?
We believe most of the value will end up accruing upstream to the companies that are actually owning and developing these renewable power and longer term the green hydrogen developments. And so we see a lot of value in the utilities that continue to transition and become leaders here, but we also see value in big oils as they transform into big energy. We believe that the amount of value that they can add in the energy transition is absolutely underestimated at this point in time.
This is Annette. Let me jump in here and ask you about the potential geopolitical ramifications from that, because clearly we have a lot of oil producers being based in the Middle East, which might not be so much leveraged towards renewables. So what do you think? Will we also see a change in who is actually running the energy business globally?
Absolutely, and thank you for that question. I think there's two major changes here happening. The first one is that an economy that decarbonizes, I think we'll see the energy businesses becoming more local rather than global. And that, I think, longer term could pose some risks to major energy exporters, although we've seen some of these countries like Saudi already starting to build businesses to start to export green hydrogen, for instance. But nearer term, I think there is a bigger dynamic happening in supply, which I think is a typical case of revenge of the old economy, where the underinvestment globally in oil and gas becomes so deep that we're actually going to see, we believe, a new upcycle for oil and gas commodities for the next 5 to 10 years on the back of structural and severe supply underinvestment. And that could actually be a nearer term opportunity for OPEC and for the Middle East to regain market share.
Let me also ask you about whether you think that this whole green initiative, which is now put in place by Europe, will actually make Europe less dependent on energy production elsewhere.
Absolutely, absolutely. There is no doubt. This is the right policy choice for Europe. It can bring incremental investments and jobs creation. We believe the green economy by 2030 on a global basis could spur $16 trillion of investment and create between 15 and 20 million jobs. But it will also help Europe become more self-dependent on energy and therefore improve the balance of payment.